What is up, guys? Thank you for watching. Make sure you hit the like button and hit the subscriber button after the video. But I had some questions from some of my subscribers and some of my some people on social media like Twitter and Instagram, and they were asking me why am I not buying into the stock market at this moment because it has bottomed. I believe this has not bottomed out yet. Let me give you a couple of reasons why. Well, first of all, the repo market. Let's read this. In 3 steps, starting March 9th, the New York Fed began offering additional liquidity to short-term fund markets. They are currently offering $1 trillion a day in overnight repurchasing agreements and plan approximately $4 trillion in terms repo during the cycle that ends April 13th. This has been going on way before this virus got here. I actually talked to a couple of people about this where the banks are not trusting each other, so they won't lend money at the end of the day that they're supposed to have in their bank to each other, so they start going to the Fed. And I knew this was a big problem because it was a liquidity problem that had happened way before the coronavirus. We just got confirmation that 3.3 plus or minus million people in the United States have signed up for unemployment. I think this number is actually bigger than that because the site was crashing. That information is where I got from Reddit. And this is only the beginning of it. We just moved past China. I don't believe China's numbers all the way because they keep a lot of their information within the country. But as far as Italy and South Korea, we have moved past them. We haven't even seen a peak or a climax or any type of drop off of people confirming that they have this virus. So this is just the beginning. If you look behind me right here, you can see how we're steady going up and increasing in confirmed rates. And this is not good. But I got this information from Johns Hopkins University of Medicine. Check it out when you guys can. Hopefully they got great data engineers to put this information on here. So let's go over back to the market. One thing that I do look at, this is my little indicator down here. It's called the Martin Trend Meter, and I use this for trading. And if you get all three red, that means it's a bearish market that you should be selling. These up here, these lines are resistance and support lines. So these charts touches multiple times, they create these resistance supports. Just giving you guys a little bit of education. When we start falling, my indicator down here just saying we're in a bear market, and it still said as we pop up we're still in a bear market. So I went and did some research, and look, so the Dow Jones in the 1928-29 crash, we went further down and we had this peak. If you guys see this peak right here, look at this peak, and then it continued to fall. So after looking at that, I did some more research, and in 1987 we had another crash, and it fell and it popped up. This retracement, and it fell back down, but it recovered after this. Now, this is not a usual crash in the market because we're dealing with a virus, something like from 1912, when in Kansas a virus came out, and then it was World War I, and we went out and fought everybody and gave them the sickness, or the measles, or things like that. This is, this is around that type of pandemic. People are dying left or right, people are getting sick left or right. But this is only beginning, and if you look at the market trends from the past, you can see what's going on. So I believe we hit this peak and we should be coming down. So this is at the day chart, and let me go to weeks so you can really see what I'm saying. I think we came down, we hit this support resistance line right here. You can see where we trace, it hit that. And I think we're going to go back down. I don't know if we're going to go back down and stop right here and then slowly go back up in recovery, or we can go back down to here and then continue going further down. It all depends on how long we're going to stay in the houses and how long people like hairdressers, barbers, people with restaurants have to sit at the house. And we may see the dollar continue to collapse, because if people are sitting at home, they're going to have to need money, and the government has already put out a stimulus bill to give Americans money. But if you continue to give people money, bail out people, it's going to hyperinflate the US dollar. So let's go over here to Mr. Powell real quick and see what he had to say. What is really happening? He's the chair of the Federal Reserve. You guys know Powell.
Congress is not alone in stepping up to try and rescue this economy. The Federal Reserve, the nation's central bank, is taking emergency measures to help businesses and Americans alike, cutting interest rates, buying up hundreds of billions of dollars of debt, and offering trillions in loans to banks. And joining us now in a rare and exclusive live interview is Jerome Powell, who is chairman of the Federal Reserve. Mr. Chairman, good morning to you. It's good to have you with us.
Good morning. Thank you, Savannah.
Well, the Federal Reserve doesn't exactly print money, but as one writer put it, you do have the ability to conjure money out of thin air. My question to you is simple. Is there any limit to the amount of money the Fed is willing to put into this economy to keep it afloat? Is it a blank check?
Savannah, we, in certain circumstances like the present, we do have the ability to essentially use our emergency lending authorities. And the only limit on that will be how much backstop we get from the Treasury Department. We're required to get full security for our loans so that we don't lose money. And so the Treasury puts up money as we estimate what the losses might be. But essentially, the answer to your question, though, is no. We can continue to make loans. And really, the point of all that is to support the flow of credit in the economy to households and businesses.
But, so you're saying, no, it's not a blank check, but yes, you're prepared to spend an unprecedented amount.
We certainly are. It's not a blank check in the sense that we are limited by the ability to take losses, but I would say that the number, effectively $1 of loss absorption of backstop from Treasury is enough to support $10 worth of loans. So really the answer is what's happened is all over the world investors have pulled back to very less risky things. That's understandable. But what that's meant is that many places in the capital markets which support borrowing by households and businesses, I'm talking about mortgages and car loans and things like that, have just stopped working. So we can step in and replace that lending under our emergency lending powers, and we will do that. We will look wherever there is in the capital markets where credit is not flowing, we have the ability in this unique circumstance to temporarily step in and provide those loans. And we will keep doing that aggressively and forthrightly as we have been.
The president has said he would like to see the country raring to go by Easter. He wants the country back open. Public health experts have resisted that timeline. Can the economy handle a months-long shutdown if that is what the public health emergency requires and demands?
Well, this is a unique situation, so I think people need to understand this is not a typical downturn. What's happening here is people are being asked to close their businesses, to stay home from work, and to not engage in certain kinds of economic activity. And so they're pulling back. And at a certain point, we will get the spread of the virus under control. And at that time, confidence will return, businesses will open again, people will come back to work. So you may well see significant rises in unemployment, significant declines in economic activity, but there can also be a good rebound on the other side of that. And that's actually one of the main things we're trying to do by assuring the flow of credit in the economy and keeping rates low, is to assure that that rebound, when it does come, is as vigorous as possible.
I guess that the issue, though, that's been sort of raised in these recent days is the cure worse than the disease? Is shutting down the economy for the sake of public health doing lasting damage to the economy that may not be recoverable? So I guess you're not a doctor, you're an economist, but where do you come down on that debate? Is it better to solve the public health crisis and then let the economy bounce back? Or do you think we should rush into opening the economy back up because, frankly, the damage being done is worse?
So that of course, is not, we're not experts in pandemics over here. We don't get to make that decision. I would say, though, that we would tend to listen to the experts. Dr. Fauci said something like, the virus is going to set the timetable, and that sounds right to me. I think the sooner we get the spread of the virus under control, people will regain confidence. When they become confident that is the case, then they will very willingly open their businesses up, go back to work, the consumer will be spending. So I think the first order of business will be to get the spread of the virus under control and then resume economic activity.
As you well know, a recession is a technical term. It means 2 straight quarters of negative growth. We've already had 1 quarter. Put it bluntly, do you think we are already in recession? Do you think it is inevitable that we will be in recession?
You know, we may well be in a recession, but again, I would point to the difference between this and a normal recession. There's nothing fundamentally wrong with our economy. Quite the contrary. The economy performed very well right through February. We've got 50-year low in unemployment for the last couple of years. So we start in a very strong position. This isn't something that's wrong with the economy. This is a situation where people are being asked to step back from economic activity, close their businesses, stay home from work. So in principle, if we get the virus spread under control fairly quickly, then economic activity can resume. And we want to make that rebound as vigorous as possible.
Okay, guys. So after we just heard from Powell, he's saying that the end of this is when we get a vaccine. We don't have a vaccine yet. And I believe, you know, I'm not a financial advisor. I believe the bottom of this market is when we hear a vaccine. You know, the higher ups are going to get the information faster than us, and then they're going to get in faster than us. But I believe this is going to continue to fall. And once it go past here, because they're saying the vaccine is not going to be here from 6 to 12 months. If we can make a peak of how many people are getting coronavirus and slightly slide down, that might be a support line too. So remember, you're talking about these support lines up here and these resistance support lines, and the market reacts to them. If we can see a decline in coronavirus cases, that will make a support line. And when we hear a vaccine comes in, that will make a support line. So I'm waiting for that information to come upon me, and then I will buy up more. But for right now, I would dollar cost average buy in and just take it very slowly because I think it's going down lower. If you like the video on LinkedIn, hit the like button. If you like the video on YouTube, hit the like button and hit the subscriber button. And I'll see you guys later. Peace.